What is a missing deed of reconveyance? Now, this little crazy thing happens more often in probate sales than it does a regular sale, and it's never really a good thing when it does come up. So let's dive into this right now. Now, this is when a title report shows there is a lien for a mortgage on the title, but the homeowner, or in probate, the estate, believes the mortgage was paid off. This is common in probate sales when the mortgage was originated in the 1990s or prior. It's something that most often happens unexpectedly, and a seller is nearly always surprised to find out there's this type of issue on their home's title. So what is it? Why does it matter? And why can you not avoid a solution that takes some digging, time, and most often, a costly outcome? First, let's answer, what is a deed of reconveyance? A deed of reconveyance shows that you fully paid off the mortgage on your home, and the transfer of ownership from the mortgage lender to you has been complete. Now, over time, you repaid your mortgage, you legally owned the property, but the lender held the mortgage lien or claim to it. Now that you've paid back the loan, the lender needs to remove the lien, and to do that, it'll issue a deed of reconveyance. Now, these days, the entity that holds the mortgage lien records the reconveyance deed with the county recorder when the mortgage is paid in full and title is shown to be clear of the lien. However, years ago, it was common that the lender would mail the deed of reconveyance to the borrower, and often the borrower would only save the document or not realize they needed to record it or hold on to it and simply lose track of the document or discard it. Now, why do you need a deed of reconveyance? Well, when you sell your home, the reconveyance deed is evidence that the property has a clear title, meaning it's free from any outstanding mortgages or other liens or claims. Now, according to California Civil Code 2941, if a reconveyance was never recorded and the beneficiary of record cannot be located, a surety bond is required. So what steps can be taken? As a seller, finding the letter showing the release of the mortgage lien is the most hopeful solution. Otherwise, the title report will show the original mortgage lender, and the title company may be able to find the most recent holder of the mortgage lien, as mortgage notes are often sold to other banks or even individuals. Often the title company will assist in this search. Now, sometimes they find the mortgage holder and they issue the proper documents to release the lien. Other times, the mortgage holder responds and cannot locate the record, often resulting in them signing off and releasing the lien. Many times, the lender cannot be located, as many of the small lenders, they're just no longer around. They went out of business. They no longer exist. Now, that's common and bad news. This whole process can take weeks, so it must be started very quickly, so the sale of the real estate is not delayed. If after a diligent search and the reconveyance deed cannot be found, or the lender will not supply the record, a surety bond will be required. Now, what is a surety bond? A surety bond is a contract issued by an insurance company that provides a financial guarantee to an interested party. Basically, it guarantees that if it's discovered that there is an outstanding balance on the mortgage, that the parties of the transaction will not be liable. There is a risk to the bond company for this, so required by California Civil Code 2941, the bond amount must cover twice of what the original mortgage balance was. And that's what the note states, usually found on the title report. So if the note says that the mortgage was for $50,000, even if it's known that much of the balance has been paid, the bond must protect for up to $100,000. The cost of the bond is anywhere from 1.5% to 5% of that bond amount based on the seller's credit and other risk factors. It could be more, so this little fiasco may cost the seller of an estate several thousands of dollars. Once the application process is approved, the bond company usually requires payment within 10 days or less, so timing is crucial to make certain that the sale will close within a specific time frame. So let's say you found yourself in a situation where you're hearing that you do need a bond. There's some common objections that I hear from sellers, and it usually goes something like this. We haven't been making a payment on the mortgage and there hasn't been a foreclosure. Doesn't that prove it was paid off? That, unfortunately, is usually the reason this issue is a big surprise to a seller. If you're watching this and you think this issue isn't one that you'd have on your home, maybe think again. If the mortgage was paid off, you likely don't know this is an issue unless you viewed a title report. Other objections I often hear are things like, we found a statement showing a low balance on the mortgage, or a statement showing that multiple payments had been made and it shows a much lower balance than what the title report shows. Doesn't that matter? Or, it's not my fault or the estate's fault. It's the bank's fault, so why should we have to pay for a bond? Unfortunately, none of that will help you avoid the requirement of the surety bond, as it's required by California Civil Code. However, the bond company may take payment records such as statements when they do assess risk. This may result in a lower cost for the bond, so it's a great idea to dig through some of those records if you have them. But once it's determined that the reconveyance deed cannot be found, nor the mortgage lien holder can be found to release the lien, the bond is required. Now, in my experience, I've seen the bank be found and take weeks to complete their record search to find they didn't have a record, and then they sign off on the lien. I've also seen that the title company do a deep dive search and actually hunt down a private individual who was quite elderly after buying the mortgage note many decades ago, and then signing off. Now that was a needle in a haystack moment. Don't expect that one to happen. Now, more often, I've seen on several occasions that the last known holder of the mortgage lien was a bank that is no longer in existence. Now, that's common and is bad news for the seller. There just isn't a way around it. A bond will be required. It's the seller's obligation to get this lien cleared, but if you're working with a real estate agent experienced in probate, they're likely working with a title company that is also experienced in probate, and both have very likely been through this issue before, and they will assist and help to navigate the solution. I hope this was helpful for you. If you have any questions, please comment below or reach out. Our email address is on this channel in the About section, as well as a direct phone number. I'm a probate real estate specialist here in California, and my partner, Bill Heyman, is also in real estate here. He's a broker in California, and he's a real estate agent in Nevada as well. He does probate administration, non-attorney probate administration services in both states, saving our clients lots of money, but we have a lot of knowledge to share. So if you find yourself in a probate situation that involves real estate, please reach out to us. We can help you no matter where you are in California and Nevada. Thank you so much. Please remember to like and subscribe. It'll help you keep our channel as a placeholder, because we really do have a ton of information for you. And like I said, reach out to us. We're real people, and we love to answer your questions. Thank you.